Hello, good morning. Welcome to this midweek market analysis. Now, so as usual, what we're gonna do is to update you the analysis and of course highlight any potential trade opportunities that you want to pay a little bit more attention to. Okay. Now, we did had a very interesting event yesterday. If you've been monitoring the market, of course, it's kind of unplanned event. Okay, it came quite a bit of a surprise as well to some traders, which is the yen spike, right? So dollar yen actually moved towards close to 150, which is a very strong psychological number. And we did see a very huge volatility in a very short period of time, where the dollar yen actually moved close to like 200 plus pips. In within the hour itself, okay, and I would say more of like within a couple of minutes. We did see a very strong sell off on the dollar yen, which means the yen actually strengthened quite significantly. But since then, we have a little bit of pullback and things like that. So we'll take a look at that in this video here as well, right? Definitely. But we'll go in sequence, right? So we'll take a look at the dollar index over here first. Okay, and of course you need to be aware we're transiting into the first week of the month. We do have NFP coming in this Friday, and along with the NFP, we do have the Canadian labor market data as well. So if you're into short-term news trading, okay, this Friday definitely there will be quite a bit of opportunities where you can look into the Canadian pairs as well as the dollar-related currencies and assets. Okay. Now, dollar index, right now we are still seeing price pushing higher, but based on where we are at the current moment, looking at the overall price development, since July this year, the dollar has been strengthening quite a bit. Haven't yet to seen any sign of a significant pullback, and of course, we are already going into the late stage of the tightening policy, where likely in November we may just see one more hike, and there's a very high chance that that's going to be the peak of interest rate, and going into next year, maybe second half of next year, that's where we're going to start to be transiting into, is the Fed going to be cutting rates, right? So I think the dollar index over here, while short term we may still see a bit more upside and such, my personal preference would be to start giving it a little bit of a thought and focus and see if we can get a reversal soon. Okay, so for that reason, okay, I'll be a little bit more focused into sell opportunities. Okay, but having said that, we know that the current trend is still definitely bullish. Okay, so you want to give it a little bit more confirmation. You want to be a little bit more conservative whenever you look for sell trade opportunities going forward. So over here, what I'll be looking out for the dollar index is to pay attention to this minor low around 106.90. If we can get an impulsive break, right, which means it's not just any break, but we want to see it fast, right, something like this, breaking it fast, and get a corrective pullback, okay, that would give us a starting sign, an initial sign that, okay, maybe the market would probably pull back a little bit deeper, right? And that's what I want to be looking out for, right? If you can get that, maybe going into NFP, that will be great, right? Which means this may just consolidate, and then when NFP comes, we get an impulsive break. Fantastic, right? That may be even a short-term opportunity trade to the downside. So if you kind of flip that into the euro, okay, so quite similar. Okay, we are expecting a little bit more upside with dollar weakness. I'm looking at the minor high around 1.0490 to 1.0495, right? So again, if you can get an impulsive break above it, that will give us our first clue that we want to focus on maybe looking for buy trade, because same logic over here, we do have a lot of upside potential when this starts to retrace or even start to reverse. Okay, so those are my take. I mean, GBP USD quite similar here. Mainly the dollar index, the euro dollar as well as the pound dollar, they're quite correlated in a way as well, right? So overall, this is my primary view. Now it doesn't mean that we'll just jump into the buy, right? Again, we need to be patient. We need to wait out for the setup to come to us, right? The break to the upside impulsive break to the upside is our initial sign. We don't jump in immediately, right? We always want to wait for the pullback. So we get that impulse correction kind of combination before we jump into the trade, right? So just be a little bit patient, and of course, look out for potential NFP trades, right? You can look at the breakout, the short-term volatility. You can capitalize on that within the week, and then maybe transiting into next week. That's where we're gonna get slightly longer-term swing trade opportunities, right? If everything falls in place according to what we want. Okay, Aussie dollar, I'm just basically neutral right now. There isn't much of a clear directional bias at this moment. So I'll just probably want to give it more time, and perhaps next week, post NFP will give us a bit more clue as to where the Aussie dollar is likely heading towards. Okay. Now, dollar Canadian may give us one more push back up to complete a internal 5-wave, as well as the bigger, in yellow 5-wave structure. Okay. So we're seeing this as a definite impulse push. So we have a 1, 2, 3. So if we short term, right, we can get a corrective pullback here, then that would obviously open up a buy trade to the upside. Okay, so this one here, you need to be careful because going into Friday we have the dollar as well the Canadian news concurrently, and it's tricky, right, because this particular pair we have two things together, right? So just take note of that. Okay, but definitely something to keep an eye on for short-term bullish opportunities on the dollar Canadian. Now, dollar yen, right? So this is where yesterday I mentioned, right? If you go down to the lower time frame, you can see it went briefly to 150, a very strong psychological number, and it dipped all the way down to like 147.30. So that's almost even close to 300 pips, right? 280, 270 pips. And then the market actually went all the way back up to somewhere in the middle of it, right? And if you take a look at the news, there's really nothing there, right? There's no fundamental perspective. There's no sudden news that causes any fundamental shift. But I think that's what we call sentiment, right? 150 is a very strong psychological number. Maybe traders are taking profit off, buy trades are taking profit off the 150. It can also be people looking at, okay, 150, let's look at a aggressive sell to just push down price a little bit. That can be a combination of all these things. And if you go and search it out, there's this keyword that pops up called BOJ intervention. Okay. Now, the Bank of Japan has intervened the yen in the past, okay, and it's not surprising that in the future it's going to do that as well. In some of the monetary policy statement from Bank of Japan, they did mention as well that they may need to intervene if the yen continue to weaken too much, right? And again, the yen weakening is not going to be beneficial to the economy of Japan, okay, because they import stuff as well. A weak yen would cause them to import inflation back into their country, okay, because generally, if your currency is weak and you import stuff, the prices that you import in is going to be expensive, right? And that is what we meant by importing inflation back into the country. So the Bank of Japan needs to definitely control that. I mean, if you take a look at where the yen has been going for the entire of this year, since the start, in Jan, that's where we really get the bottom of the dollar yen, and you can see, since then from 127-ish, we're right now trading at 150 range, okay? That's very, very significant, okay? Kind of give you a very quick percentage view of that as well, right? So from where we are in the start of the year to where we are now is like up close to 18%, right? I mean, if where we are right now is about 17 point something, but it's really there, 17-18%. And if you in economic terms, if you take everything else constant, okay, can you imagine staying in Japan and your currency have weakened close to 17% of value in relation to, let's say, just comparing to the dollar, right? And imagine if today you import stuff from the US and you stay in the Japan, okay, without any talking about price hike and things like that, even with inflation globally happening so strong, if you take away all those factors and you just look at the yen versus the dollar, and if you import stuff from the US this year, everything has risen close to maybe 17% to 18%, right? Just because of the valuation of your currency dropping. So that's very, very, very significant. Okay. So is the yen likely gonna keep going higher? It might be, but I think that going into next year, okay, from a macro perspective, I'm actually very much interested to see if we can get a massive sell down on the dollar again, right? Because again, on the daily perspective, we are getting close to a very significant high in the past, right? So that was back in October last year. It briefly touched around like 142, and then we have a massive sell down, right? And then this entire year we kind of climb back up. So obviously going into that zone, okay, going into next year, I think I'll be very much interested to see if we can get any massive sell down, right? And if we can, definitely I want to ride on to that, okay? But short term, I think, from week to week basis, so far right now, I think we may still have some upside potential, right? So if you take a look at this perspective, we have a drop, we have a pushback up. That's a V shape. So if you can get a corrective structure here, short term, we are still expecting, upside, okay? So that's my take on the dollar yen, and then a little bit on the yen side perspective, okay? Then we have the gold trade over here, right? So gold actually came down very nicely and tagged the 1820, okay, which is our initial target here. I think we were targeting a little bit higher, right? The 100% mark. Okay, so kind of tagged that and it came down a little bit. Right now testing the 123. So overall, I think you want to be a little bit patient, okay, because this structure may have completed internally, and then of course on the bigger scale perspective, it may have completed as well. So you don't want to be aggressive selling anymore. It's not a buy yet, okay. But I think if we can get, similar to the euro dollar perspective, if we can get kind of like a impulsive break above certain minor high, okay, then the upside will be a little bit more attractive on that, okay. So yeah, that's on gold. Okay, last one here to just touch on in the video is BTC, right? So Bitcoin did a very nice little move recently after completing that three wave. It came down impulsively. So short term, if you can get a corrective retracement, something like that, then we can still catch this sell, and then after that, a bigger move back up potentially, right? So if you're into crypto, Bitcoin here may give you some sell opportunity in the near term. If you can get a corrective structure development towards like 28110, 28305 area, you can look for a sell with the target around 26940. Okay, that's all for me for today's video over here. All the best to your trading for the remaining part of this week, and we'll see you guys in the next one.